All right, good evening, everybody. Tonight we are going to be talking about Forex basics. Um, this is the scratch from the beginning of Forex, because in order for you to trade Forex or any other instrument, you must start from the beginning, from the scratch. So these are actually the basics about Forex trading. Now I'm going to be talking about pending orders tonight, because pending orders is the perhaps the most important thing in trading, because without orders, you cannot place a trade. Without all orders, pending orders, it is very difficult for you to make money or to play safe in Forex. So pending orders are very important in trading. So we are going to be looking into pending orders tonight. If you can hear me, please, can you say yes? If you can hear me clearly and see my screen clearly, can you type yes, please? If you can hear me clearly, okay, good. All right. Okay, Gozel Peter, okay, yes. Okay, let's go forward. So pending order, what are pending orders? Pending order is a request made by a trader to a broker to say at which price level a position should be open or closed. What does that mean? When you want to place a trade, we have markets, the current market price. So now, if you are placing a pending order, you are telling the broker which you are trading with that, look, I am not ready to enter the trade now. I want the price to move to a certain level before I am going to place this trade. I'm going to buy or sell this particular currency pair. Let me use our currency, Nigerian currency, as an example. Let's say you are buying dollar, and let's say you are buying dollar. Now, when you place a pending order, if today, for instance, the dollar is at the rate of 361 exchange rate, and you place a pending order on your MetaTrader 4, your trading platform, wanting to place a buy, you tell the broker that, look, 361 is too cheap. I'm not ready to buy at 361. I'm going to buy when the price moves to 380 or even 400. That means you are expecting the price to move up. That is, you're not ready to place a trade. That is for a pending order called buy stop. Now we have type of pending orders. We have buy stop. Then we have buy limit, and then we have buy sell limit. Now let me talk about buy stop. What is buy stop? Buy stop is the one I just talked about right now. Buy stop means placing an order above the current market price, meaning that you want dollar to move to, instead of 361 naira for $1, you want the price of the dollar to move up a little bit to maybe 380 or 400 before you buy it. That is what called buy stop. That's what called buy stop, placing an order above the current market price. We are going to look at it on the chart so you understand what I'm talking about after I give you the explanation. Now, what is called buy limit? Buy limit is simply placing an order below the current market price and then expect the market to go up. Meaning that the market maybe at the moment is actually high. Maybe dollar, let me use dollars and naira for example again. Maybe now today the dollar price is 361, and then you are saying that that price is too high, that it should come down to maybe 300. When it comes down to 300, you will not place a buy. Once you place a buy, because Forex is about prediction. If you place a buy and the price indeed move up, you make profits as a result of that movement. So buy stop is the opposite of buy limit. I mean, yes, it is opposite of buy limit. Buy limit is the one you say, let it come up a little bit, then I will buy. Then buy limit is you're saying, let the price is a little bit higher, let it come down a little bit to a lower price. So you place an order below the current market price, but then when the price moves down to the level you want to place your buy, then you will not be in the trade. We are going to place all the orders right now after the explanation. Now let's talk about sell stop. Now in Forex, what we have is either you are selling or you are buying. So sell stop is the opposite of buy stop. When you place a sell stop, it means that maybe the price is right now you want to sell, but you're seeing the price is still very high. You want the price to come down a little bit. Just like the Naira dollar explanation again. Today is 361 Naira and you want to sell. He said, look, dollar today is too high. I don't want to sell. Let it come down to 300 or 250. Then I will sell. Once you place the order, you will type the amount on the platform, which I'm going to do the practical. Then the price comes down. You will not be in the trade officially. And if you go down further from where you place the order, you make profits as the market is going down, because Forex is all about prediction. You predict the movements of the markets, and if the market goes their direction, you make profits along the way. Okay, let's talk about sell limit. Now, what is sell limit? Sell limit is opposite of sell stop. Sell limit is placing. Sell limit means sell limit right. Sell is the opposite. Sell limit means placing a sell order above the current market price and expect the market to come down. All right, it's like I told you, it's the opposite of the sell limit, is the opposite of sell stop. Now, for sell limit, it means that you place a price, you place a sell order above. Maybe the price is coming up. The price is coming up and you are not comfortable with the price at that moment. You are not ready to sell. Maybe the price is still 360, 370. And you are saying that let the dollar comes up to maybe 400. Once it is up to 400 per Naira, 400 Naira per dollar, then you can now sell your dollar. So your sell limit is just opposite. Expect the market, you place an order telling your broker to sell, place a sell for you automatically. When the price gets to 400 Naira, then you sell. Because once you place all these pending orders, once you place them, you can go and sleep. You can go to wherever you want to go to, because Forex does not allow you to, it does not mean that trading doesn't mean that you have to be with your computer or your laptop 24/7. You can actually go to wherever you want to go to, in as much as you are placing all these pending orders I'm talking about. Then we also have what is called stop loss. What is a stop loss? What is a stop loss? All right, a stop loss is simply a stop loss is an order that you place with your forex broker in order to sell a security when it reaches a particular price. A stop loss order is developed to reduce a trader's loss on the position in a security. What does this explanation mean? It means that if you are placing a trade, whether buying or you're selling or instant execution. Now, I've not talked about instant execution. At instant execution, apart from the pending order, instant executions are orders you place immediately. You are not looking at price going up or down. You are just telling the broker, look, I want to trade now. And then you place the order immediately. That order is called instant execution. If you're using an iPhone, I think it is also called the same name, but some phones has a way of interpreting that particular order. So stop loss order, it means that if in case maybe you are in a trade, go for it, sometimes you are going to lose money. It is not all the time the trade will go your way, but if you have a stop loss, you tell the broker in case the price is going, maybe you are buying. If you place a buy, it means that you are supposed to, the market is supposed to go up. That is the only time you make money. And that movement, like I said the other day, that movement is called pips. The movement of that price, when the price moved in your direction, it calls pips. So if the price go up as you are buying, placing a buy, you make profits in that process. But in case the market did not go up as you expected, if it's coming down instead of going up, if you don't put a stop loss, that means your money is going to be wiped out. That is how most people say they trade Forex and they lose all their money because they trade without stop loss. Of course, there are some people who trade without stop loss, but those people are people that has maybe large account size. They have a lot of money in their account and they know even if the market is going deep or going against them, they know they have the money to withstand that particular movement. So, but you and I who are small traders, we are managing our small account, you must trade with stop loss in order not to make your money, to lose all your money in case the market go against you. So now let me show you how these orders look like on the real Forex chart. Stop loss, pending orders and all that. So let's go to my chart. Let me go to please, if you can see the screen, can you type yes? If you can see the screen, please, can you type yes? Okay. All right. Now, this is Forex chart. Forex is about two pairs. We have tons of them. This is what they call Euro USD. Look at the currency pair here, Euro USD. This is one of the major currency pairs that are traded. So let's talk about, let me show you on this chart how buy stop look like. Now, this place you're seeing green. Let me zoom it a little bit. All right, this place you're seeing green. This green line is the price at the moment. The market is at the moment going down. These things you're seeing are called candlesticks. All these things you're seeing, this green and red, these things are called candlestick. We are going to talk about candlestick the next time, but let's just talk about pending orders right now. This place is where the market is right now. Now, if you want to place a buy stop means that you are going to place your trade above, like here is the current price. So your buy stop, let me just use an horizontal line. Let me even remove. Let me even remove this line. All right. This is the plain chart now. Now, if you want to place a buy stop, you tell the broker, look, I want to buy here. I want to buy here. I want to buy here. This is the correct. This is where the green line is where the price is right now. But you are saying you don't want to buy here. You don't want to place a buy. You want to place a buy in case the market come up like this. All right. Let's say you want to place a buy. So you now look at these numbers. If you are looking at this corner, you see the number is here written. This number, this 1.1 this one here, 1.11670 is the price at the moment. You write it down. So please, I want you to write this price down. Let's go. We are going to play this trade after now. Write it down. You are going to play this trade after now. The price we are placing this trade is 1.11. Write it down. Write it down. Write it down. For your buy stop, it's called buy stop. You are going to practicalize. You are going to put it in practical. Place the trade before the class is going to be over. So you're going to play that trade, which is 1.111710. Buy stop. You write it down. Buy stop. Buy stop. Euro USD. Euro USD. Now, whenever you are buying, you put your stop loss down. All right. So if you are placing a buy this place, if you are placing a buy stop, we have taken these numbers down now. You can now say, okay, let me put my stop loss here. Your stop loss has to be down so that in case the price go against you, in case the market is sort of going up, and if you place a buy stop now, you expect that the price will come up. If you come up, that means you are going to be making profit. That is how we trade. And that movement of price moving from this particular place to front like this is called pip. The movement is in pips. So now, as you are placing a buy stop, you can now put your stop loss down since it's a buy. You are placing a buy stop up, you put your stop loss down because it's a buy order. So let's say our stop loss is 1 point. Stop loss is 1.11322. Now, they have what we call take profit. Take profit meaning that you want to place a place where in case the market moves to that direction, you should be out of the trade. So now let us measure our take profit. So now our take profit is going to be here, this particular place. So whether you are sleeping or you are working, you are in the meeting, if the price got price, most of the time it may move to your direction. And if you don't place take profit, before you know it, before maybe you are sleeping or you are very busy, it now go back to that particular opposite direction where you are expected to lose. Before you know it, it moved down to where you are supposed to make money, and then go back again, and in that position, in that direction, you lose your money. So the best is to just set all these things so that you can just place your trade and go to bed and sleep. Now let's just take our profit as take profit 1. Let us take it at 1 point. Write it down, please. 1.12. Everybody write it down, please. 163. Please write it down, We are going to place this trade. All right. That's their take profit. Now, there's what we call take profit 1 or 2. What take profit 1 or 2 means is that you want to take profit in 2 places. In case the price gets to this point, you want to take that profit. Then you also want to take profit, let it come up again. This is the first take profit. Of course, you make smaller money, but this other side, you make a bigger amount of money. So let's say you want to take profit, meaning that you're going to play this trade 2 times. So let's say I'll take profit 2. Write it down, take profit 2. Take profit 2. Take profit 2. Our take profit 2 is 1.180. 1.809. All right. Okay. Now this movement from here, let's say our first entry price was here. This place to this place where we have our first take profit is, I think, 41 pips. You are seeing it on the screen. That 4.1, 41.1 is 41 pip. To this second place is about 105 pips. We are going to talk about pips next time, but let's just talk about trading, how to place trade. So this is called buy stop. You have placed your buy stop. You are going to place it after we finish with this explanation. We'll go to our phone, and then we are going to place it on our phone. Now let's take another trade with buy limit. Let's take our trade with buy limit. Now this was buy stop. Write it down, please. Write it down. Write it down so you don't confuse yourself. Let's take buy limit. Buy limit. Now buy limit, like I told you, buy limit is placing an order below the current market price, and then you expect the price to go up. So what does that mean now? Look at where this green line is where the price is. So if you want to place a buy limit, it means that you are telling the broker, here is too high. I'm not ready to buy. I'm expecting, I believe the market will come down again. So now you place your buy here. You expect the market to come down. You say, I am very sure that the market will come down here before it will go up again. So you now place your buy limit here. And what is the entry price? Write it, entry price. Entry price. Entry price. Entry price is 1.10839. Same currency, Euro USD. Now, I told you, whenever you are buying, if you are buying, it means that your stop loss will be below your entering price if it is a buy. If it is a buy. So let's say you are entering from here. So let's say your stop loss will be down. So that in case the market, instead of going up, if it's coming down, that is how people lose money. If it is coming down, if it gets to this point, it should stop you out. So any money you lose is a small money. But if you allow the market to keep coming down without putting stop loss, if it comes down to this particular place, and maybe you have a very small account, that means all your money is gone. So we are going to put our stop loss here, where we have this. Let me change the line to red. This is our stop loss. Stop loss. That's our stop loss. So what is that number now? That number is 1.105 60. You are the stop loss for buy limit. Okay. So now we've talked about buy stop. We've talked about buy limit. Now let's talk about sell. Let's talk about sell limit. Sell stop and sell limit. Okay, let's take another currency, USD CAD, for today's class. Okay. Now this one is USD and Canada dollar, United States against Canadian dollar. So we are going to place a sell stop. What is a sell stop? I told you sell stop is placing an order below the current market price. That means now look at where the price is. This green line is where the current market price is now. So you want to place a sell stop. So where will your entry be? Let's say we are going to enter from here. Entry. Let's place our sell. Remember, please, whenever you're placing a sell limit an order, don't be too close to the entry price. If you are too close to the entry price, it won't go, it won't enter. So ensure that you give it small number, maybe some pips. We'll talk about pips next time, so you understand what pips is all about. So you just give a small gap, you enter from here. So your entry price, I'm going to keep it green. Entry price. Let me write I'll call it entry price. Entry price. Sell stop. Okay. So we enter from here. Now, what is the entry price? The entry price, so write the currency down, USD CAD. Make sure you write it down. Write sell stop. Sell stop. Entry. Entry is 1.37556. All right. Now, where will your stop loss be? Since you are selling, your stop loss will be up. Let's use another line again for stop loss. Let's put our stop loss here. Up. We'll put it red. And we'll say stop loss. Call it stop loss. We'll call it stop loss. Stop loss. So what is that price now? That stop loss is, write it down. Write it down, is 1.31, 1.31, 587, 1.31, 587. That is the stop loss. Now, since you are placing a sell order, you expect the price to come down. That is when you make profit. So let's expect that the price will come down to this place where you see this blue line. So let's put our take profit. Let's put our take profit. First of all, let's put take profit 1. Take profit. Let's just use the same, or let's use another line. Take P. Take profit 1. Let us use green. We call it take profit 1. Take profit 1. Okay. So this is our take profit 1, this place. So the market come down, that's when we make profit. If it goes up, then we are going to be losing money. So our take profit 1 price is here. Let's take profit 1 at, we'll write the number down. Look at where you are seeing the number. The number is down here. Once you use your cursor, you're going to have this chart. It has a phone version, so I'm going to show you on phone too. This is a laptop. I'm using my laptop, but it has also phone version. You will download this chart because you cannot trade without a chart. You must have this chart to trade with. So we have take profit 1. Take P1 is 1.3049. I hope everybody is writing it down. Please write it down. 1.30493. That is take profit 1. That is here. Let us delete these things. This was the entry price. This is now take profit price. Take profit 1. Then we can now take profit 2 here. Take profit 2. Take profit 2. That's our take profit 2. Yeah. The same, the next line. Okay, so we'll type the number, put it down, take profit 2. Take profit 2 is 1.30237. Bam. We have taken our order. This is what we call pending order. This is our stop loss for, because this is sell stop. This is our stop loss. This is our entry price. Remember, it's below the current market price. So we put it here. Then this is our take profit 1, and this is our take profit 2. Now, let me delete all this. Let's talk about sell limit. This is sell stop. Let's talk about sell limit now. Let me delete them. Okay. So let's talk about sell limit. We've talked about buy stop, buy limit. We talked about sell stop. Let's talk about sell limit. Now, like I told you, I said sell limit is placing an order above the current sell limit is placing an order above the current market price and expect the market to come up, and then the market should now go the opposite direction. Now, for instance, this is the price, right? For a sell limit, you are saying that this price is too low, it's too cheap. You are not ready to sell your USD CAD now, it's too cheap. So let it come up a little bit. That it should come to this up first before you can sell. So let's play the sell limit here. Let's put our sell limit here, entry price. So take another pen, another this thing, another paper, write sell limit USD CAD, USD CAD. We are going to place this on our demo account. So we are going to put our sell limits at entry price, right? Entry price at 1.315. So that is our entry price. Our stop loss can still remain the same as the buy, the sell. Remember, all of them, they are sell, but just different time and different prices. So let's still put our stop loss this place. Where did we use our stop loss at the other time? The other time we said USD our stop loss should be, our stop loss should still be, stop loss, write it down, stop loss 1.31587. That is stop loss. Now take profits. Take profit 1. Let's use the former one. We can still use take profit because they are still sell. They are just different types of order. We are still using this first take profit 1 order, which is take profit 1. We still use 1.30493. Take profit 2. Take P2. See, whenever I'm sending you signals, this is what you're going to be seeing. I'm going to say take profit 1, take profit 2. All right, so take profit 2, it means that we are going to take profit 2 is 1.3237. Okay, now we have done buy stop, buy limits, sell stop, sell limits. Do you understand what I have just discussed? Please, if you understand what we are talking about, can I say yeses? If you understand these things, can I say yeses? Though it is not easy to understand everything one time, this is a video, it is recorded. I recommend that you watch this video again so that you can understand it. Watch it over and over before you understand the whole thing. So this is how we place order. This is called pending orders. And this is how your chart is going to look like whenever you're trading. This is with the computer. And this is called Trading View. I am using Trading View to train you tonight. Trading View is a chart website that you can use to analyze all the instruments, including stock and cryptocurrencies, Bitcoin, and all the other instruments. So Okay, you said that if somebody, you're asking if I place take profit two, if I place take profit two and it didn't hit take profit one and place for forget for target one. Yes, you can modify it. You can change your, you can actually change. What they are saying is that if in case you are placing an order and it didn't reach your take profit two, you can actually change your take profit two. We are going to show you. I'm going to show you how you do that. It's called modify. So let's go to our phone. Go to your MetaTrader 4. I'm going to start sharing with my computer screen, with my phone screen, so we can see the market on the phone, where we are going to place it on the phone. So let's stop sharing with the computer and let's start. Please, can you see my phone screen? Please, if you can see my screen, type yes. All right. Yeah. Okay, this is my trade that is going on. This trade is going on right now. Let's go to our demo accounts. And so you come to this place. When you check your currencies, once you click on this first tab, you will see the currencies you want to trade. So let's place Euro USD. So once you just press and hold, once they press and hold, this button will pop up. You will see new order, open charts, symbols, properties, simple view mode. Now you want to place a trade, so you are going to click new trade. All right, this is where you are going to type in your details, the orders you have made up your mind to trade now. Let's say we are going to use, okay, let me use mini lot. This lot is $1 per pip lot size, 0.10 is called mini lot. This is, we are going to talk about lot next time, but I'm going to use mini lot to play this trade. Now you can see that we have instant execution. Instant execution meaning that I will place the trade now. Okay, let me say I want to play the trade instant execution. So what do? I will just come to where I've written down my stop loss. Instant execution, I don't need to type in entry price because the price is already shown on the screen. What I will do, I will just go to my Euro USD. I will type in stop loss. Stop loss is where you're seeing this red. Yes, you are going to type your stop loss there. Then this side is where you're going to type in your take profit. All right, so let me type my stop loss here. You use your hand to click this place. Once you click here, you now use delete button and then delete all these ones, all the zeros. Then you type in your orders. Now the stop loss for Euro USD now is not a pending order, so I'm doing it instant execution. I want to show you how we can place instant execution and how you can place pending order. So see instant execution. So you type 1 point. Please, you may place this trade after now, please, but just watch me first. 1 point. Stop loss 1.11233. This automatically the sell will now will disappear. The buy sign will come up. Now you put your take profit. This place is where you put your take profit. Take profit 1.1 2163. No, it's not coming up. Take profit 1. Entry top. Take profit 1.11. 1.112163. There's an error here. Euro USD. Stop loss, yes. Take profit. Okay. Let me see if there is an error. Let me go back to my trading view. Let me go back to my trading view and see if there is something I'm not typing. The numbers are not, if the numbers are not correct, you will not be able to place a trade. It won't pop up. Now, this is my trading view on the screen with my phone. Okay, so nobody say number. Okay, let me check. I'm making there's an error now. I'm going to use my phone. All right, this is the phone version of trading view. The Forex, you can trade Forex with your phone. Anything you have done on the laptop is showing on this phone. All the things I've done with my screen on the laptop can appear here. So with the phone, you just type Euro USD. Euro USD. All right. So let's put our buy stop. Let me just put my buy stop. I'm going to show you how you can use this thing. Okay, let me put buy stop as. I may take profit 1. Is instant execution. Take profit 1 is going to be 1.12. 1.2167. All right. Okay, now let's go back to the MetaTrader 4. Let's go back to the MetaTrader 4. It's very slow with phone because phone is not fast. Euro USD. Okay, let's take our profit here. Let's take our profit at 1.12167. You see, if the numbers are not typed correctly, you will not see the buy symbol pop up. Now you can see that the buy symbol has pop up now because it is correct. Now this is take profit 1. So what you do is you're going to play this trade since we have take profit 1 and 2. So please write this number down. This take profit 1.12167. You can see it on my screen. Write it down. You can see it on my screen. Write it down. So that you can place it after this tutorial. You can place it on your own. You're going to play this trade on your own. This is instant execution. It means that you are not adding, you are not placing any pending order. You're entering the trade now. So once you place, click buy. When the price moves to that place, it will automatically stop you out with profit. So just click buy. It's open. You can see that it starts with green, with red, negative red. Tomorrow, we are going to talk about the next basic class, we're going to talk about these things, what you call all these, we call trading window. Well, let me briefly talk about trading window. The balance you're seeing here is the amount of money you have deposited before you place the trade. That is $3,000. The equity you're seeing is the amount that is, once you place a trade, your equity will be fluctuating. If you are positive, your equity will be going big and your balance remain the same. If you are negative, your equity will be also going down. Your equity will be going down and your balance remain the same. Then free margin. Free margin is the amount of money you still have to place a trade. So if your free margin is going down, it means that you don't have to place more trades anymore. Then margin level percentage. This is a very important lesson. Margin level percentage is very important that you understand what is that. That is where most people lose their money because their margin level percentage is low. This their margin level percentage should not be less than, it should not be even close to 100. In fact, it should be close to 500. Because the more you allow this margin level percentage to go down, the more your chances of your broker closing your account is very, very close, open. Once it is below 100, this 2,690, once that thing gets to 100, your broker will automatically close your account. They call it margin call. Why are they going to close the account? It is when maybe you are taking a trade and maybe you are in loss. That trade is not giving you profit, you are in loss. If your trade is going against you and your margin level is close to 100, they will close your trade. So do not take trades that are too big for your account. For instance, I'm using a $1 per P plus size, which is mini lot. For this account size, it's not too big. But if you are not placing trade, place 1, place 2, place 3, place 4, some people place 10 trades at the same time. That is not the professional way of trading. 1, 2, 3. Depend. We are going to do about account risk management. We'll talk about risk management, but make sure this margin level percentage is very high. 500, 600, 700, 800 is okay. But don't allow you to go close to 100. All right. The margin is what your broker remove as the margin, as a down payment that you deposit. So that is it. We have placed instant execution. Now let's place pending orders for Euro USD. So you look at the Euro USD, you just press and hold. New order will pop up. You click. This is the trading where you have your lot sizes. If it is 0.01, it is called micro lot. This one will give you 10 cents per pip. If it's like this, it's going to give you 20 cents per pip. It is 3. If it is like this, 30 cents per pip. Then the mistake most people make, they want to trade with standard lots. This is standard lot. If you are using standard lot, you are going to make quick money because any small movement of the price, it gives you 10 pip. So you make quick money, but if the market is going against you, you also lose your money fast. So most people use standard lot when they are supposed to be trading with a micro lot or even mini lot. So do not use standard lot anyhow. Now let's use pending order. For a pending order, if you look at your screen, you'll see one place like this. Can you see it, please? That small arrow, that short arrow, can you see it, please? If you can see it, can you type yes? If you can see small arrow, can you type yes, please? Okay, great. Great. All right, now, for a pending order, you must click there. Once you click there, you can see that all the pending order buttons have come up. Buy limit, sell limit, buy stop, sell stop. So now let's trade buy limit, Euro USD. So you click buy limit. Let's change the lot size to micro lot. Press 1. 1 0. This is $10, $1 per pip. So now you see where the price is. You put your price. After this exercise, place this trade on your own. So the price is, if you have not written it down, write it down once again. 1.11710. This thing does not pop up. It seems I made a mistake during the. Okay, let's go back to the chart again. It is when I was writing this thing down, there was an error. Okay, let's go to the chart. Okay. Let's go to the chart. Okay, let's say we expect the price to come up. So let's use that particular. The green is where the current market price is now. You are going to, let me slide it like this so you can see it clearly. So we'll put it here. So let's say entry. Euro USD entry is 1.11614. All right, because it's above the current market price. That is, you are going above the current market price. All right, that is the price. Now we've gotten that. We'll go back to the MetaTrader 4. So you can trade on the go. You can trade as you are going, anywhere you're going to, you can trade. You just minimize your. Okay, Euro USD. Now we are talking about buy limit. No, yeah, buy stop. Buy stop. Okay. Buy stop, the price, the entry price is 1.1. Buy stop. Is it 1.1? Buy stop. Euro USD. Okay. Let's say 1.11. 1.1 was 614. 614. The price will pop up. You go to the stop loss. Stop loss is 1.11322. See, if you don't type it correctly, this will not pop up. Now take profit one. Take profit one. Take profit one. Okay, let's go back to our take profit one on the chart. It seems that the things I wrote down I didn't write it correctly. Buy stuff. Buy stuff. Okay, let's go back to the chart again to take our profit. Take profit one. Okay. Now we can now come here. Since we have taken we can come here and take our first take profit. Our take profit one is 1.12138. Right? Then take profit two. Our take profit two is going to be, our take profit two is going to be up here. Take profit two is going to be 1.12896. Okay, so you go back to your MetaTrader 4. If you don't understand the thing, like I told you, do not overwhelm yourself. Is because you're doing it for the first time. So this video is going to be already recorded, so you can watch it again. I'm going to send the video to each and every one of you. So go entry, buy stop. Okay. So put the entry price 1.11614. Stop loss 1.11322. Take profit 1.12138. So what you do is you just click place. Boom. You can see that the trade, the buy stop is not moving, but the instant execution already we are in $1 profit. That means the market has moved $1 up. So what this means is that whenever the market moves up towards that direction of where we have placed the price, that is when we are going to be in this trade. So by the time you place the trade, you see that the trade will counter like the way this one is counting, either negative or positive. Negative will be showing red. All right, so now let's click buy limit. Let's place buy limit. For the same currency pair, this is practice, so make sure you do this with your own smartphone. Buy limit, Euro USD. Whenever you're trading, check this lot size. Entry 1.10839. Stop loss. Stop loss. Let me show you one thing. Sometimes you may be having a phone, a signal, and you don't have the time to be typing. Once you just enter the price, just click place. You don't put your stop loss, you don't put your take profit. Then you can now come and click modify. All right. So let me do something. I want to collect the stop loss from this particular one because they are still the same trade, Euro USD. So let me just come here and copy. See where this zip is, that zip sign. By the time you click it, it has copied the stop loss. So just go back to this particular one that you are doing. You just place modify. Now you place your stop loss here because they are still the same buy trade. Just place it. Okay. The buy limit stop loss is not. It seems okay, we have a different stop loss of buy limit. Let's put buy limit stop loss. I remember now we have a different stop loss of buy limit. Okay, our buy limit stop loss is 1.10 1.10560, and then I'll take profits too. I'll take profit too. One point 1.1238. One point one two 138, and then just click modify. All right, so now you place buy stop and buy limit. Now let's place sell limit with sell stop with another currency pair, USD CAD. The numbers we wrote down. I believe this time around I didn't make that mistake again. Let's go to. We can still place instant execution here. So let me say I want to place instant execution. I will just put in my stop loss. Stop loss, I can use 1.1. 31 587 587. Then take profit. Take profit one. I can see 1.1. No, not 1.1. 1.3. 1. 1.30. 493. 493. The numbers are, you have to write it clearly. So you have this now. This is instant execution. You just click sell, right? Boom. You can see this is counting already because it's instant execution. You're in the trade. You go to USD CAD again for buy stop, sell stop rather. Remember, sell stop is 1 minute. Excuse me. 1 minute. All right, so you put in your entry price. What is the sell stop? You put the enterprise. Our enterprise was 1.30 750. Our stop loss is 1.35. 0.35. 1.315. 87. Take profit. Our take profit one is 1.30493. So what you do now, you just place. Boom. Right. Now this is buy limit. You can see sell. This is sell stop. You can see that it has not triggered. So you're expecting the price to go down first before it will trigger. So nothing is happening. Now let's go to sell. Let's go to sell limit. You come here, you click sell limit. Our price was what? Our price was 1.31. Make sure you are writing this thing down, please, so you can place it on your own. Practice makes perfect. 1.31315. Then you click the loss. The stop loss is 1.315. 1.31587. Take profits. Take profit one is 1.30493. Right, you just click place. So since the order is take profit 1 and 2 for this particular sell limit, You come again, you click the same CAD, UAD, CAD. You place it 2 times. Come here again, sell limit. All right. You put in the price. This time around, you may just copy it from here. You may just come here, click modify. Then just copy the price. Copy it. Instead of typing it, waiting time to be typing, just come here. Click sell limit. You cancel these zeros. Paste it. All right. You can now, it's okay, sell stop loss 1.31587, and then take profit 2 1.302307. Take profit 2. You just click place. Boom. All right, these are your trades. Ordinarily, these positions are too many. But with proper risk management, we'll know how much money we lose or not. This one now, we are not using any risk management. We are just placing the trades. So I believe you have understood these things, but if you don't understand, it's still okay. Like I told you, trading is not a one-day learning thing. It's repetition, practice, and the continuous learning that will make you a perfect trader. So if you have any questions, maybe you can keep your questions till when we come back tomorrow, the next class. But I will send you these videos to each and every one of you so you can watch it, and then you can now keep your questions for the next time. Your assignment tonight is to go to Google and then find what is pending order, and types of pending order. Read it on your own. Play this trade on your own. The next time we come on this class, I want to ensure that we all have placed this trade. In fact, play this trade right now. All these things we have talked about tonight, I want you to place the trade so you can practice it. But after practicing it for some time, you can add, maybe use good demo for 2 weeks or 1 month. Maybe the next month, which is ending part of November, you can be trading a live account. All right, I want to thank you for coming, and I want to encourage you to keep on learning. Good night.